So many of you guys are struggling with having confidence in your trade. And I think that the only way to have confidence in your trade is to make sure that you have the confluences to back it up. So in this video, I'm going to show you 5 confluences that I use on a daily basis to give me more confidence in each and every one of my trades. Welcome back to the channel, everybody. My name's Artie, and this is The Moving Average, a show where we discuss everything day trading to keep you profitable on a consistent basis. So the 5 things that I look at when trying to get my confluences for my trade, and I need at least 3 of them in order to enter a trade, is divergences, support and resistance lines, trend lines, moving averages, and a break and retest. Let's jump into the charts. I'm going to show you exactly what each one of those look like. All right, I just picked a random pair, GBP USD. We're going to do something really quick and draw up support and resistance zones. So we have some rejections off of these zones, some rejections off of these zones, and this is the recent high point. So when we have rejections off of these zones, that's one confluence. And I usually look for a rejection coupled with a big ass candle because you guys know I love to trade my big ass candles. So if we take the chart out to the 1 hour time frame, you can see we had a fat ass rejection right here. So that previous level would be a zone to target or trade off of. So with any uptrend, there will always be that breaking point where the price rejects. When getting that first rejection candle off of that zone, what you should be doing at support and resistance levels is looking for divergences. If we look here and here, we're making higher highs, correct? But if you look at the RSI, at this point, we were at 76. And at this point, we were at 76. It is not an off-tilt divergence, but it's still a divergence because the price was making higher highs while the RSI stayed the same. That's one confluence. Rejecting off of the support and resistance zone is another confluence. So that's only 2 confluences, and that doesn't make me confident enough to get into a trade. It is way too risky, especially risking your own capital. If you want to do that on demo, you can go ahead and try, but they usually don't play out. Now, if you had 3 confluences, there's your moneymaker right there. So when we drew up that trend line, we have a divergence here, rejecting off of a known support and resistance area, breaking through that trend line, retesting. But I would wait in this area right here because we have a support zone. But once we comfortably break below that, for example, right here with a big ass candle breaking below this wick right there, you can enter in a short position because you have a break of a support and resistance, a break and a retest of a trend line, as well as having a divergence. And when I get into a trade on a 15-minute time frame, all I'm looking for is 20 to 22 pips to cover the spread. 20 pips with my risk to reward ratio is plenty for me, and I know 20 pips is way easier to get than waiting for those 150, 60 pip moves. So when looking at price targets and where your 20 pips fits in before you enter your trade, you want to make sure that you can at least get 20 pips out of your trade. So you look left and see where you've had the most price action in a specific area. So we've had a zone right here, this whole consolidation period, and 2 rejections off of this same area. So if we drag this out to this zone where the price crossed the most, right about there, that's 34 pips, and I would have been completely satisfied with 20. So I'm going to move mine to 22 pips to cover my spread and commissions, and I'm going to keep my stop loss at that support and resistance level, which is 10 pips, giving you a 1 to 2 risk to reward ratio. So just a quick recap, we had our divergence. Confluence number 1, break in a trend line. Confluence number 2, drop below a previous support and resistance level. Confluence number 3, comfortable enough for me to get into that trade. Now, the reason I went with those 3 primarily is because they are my absolute favorites and they hold more weight when it comes to the style of day trading that I do. If I'm really hesitant on a trade, I will also toss in 2 more confluences. And if you can get all 5 of these to line up, ooh, it's almost guaranteed, or at least a way higher win rate. So the other 2 confluences are rejections off of moving averages and also a break and a retest. So nothing really happened here where I would consider it a break and a retest. I like a break and a retest and a rejection with a big ass candle. I didn't get any big ass candles right here, so that confluence didn't make it on this list. Now let me show you what a trade looks like when you have all 5 of those confluences put together. So we are in an uptrend. We have our trend line. We have a big ass candle rejecting off of that trend line that was formed right here and right here. Now if we look at this low, this higher low, this higher low, and this higher low, marking these up with vertical lines so you get a clear depiction on the RSI. We had a low, a higher low, and then a lower low. This right here is your hidden bullish divergence. So now what we're waiting for is that price to push up and break that support and resistance level. We had the break and the retest. Once this happened right here, I want you to see like good movement upwards. You can get in on the first, second, third candle, whatever you feel comfortable with, knowing that all these confluences are lining up. I'd wait for this candle just to break above that wick. Your stop loss is going to be back into that zone where you had a lot of price action and below that swing low. And your take profit is going to be that zone right here where we had our previous high. I totally forgot the last confluence, and that's the moving averages. So if we put up the moving averages on here, I have the 200, the 50, and the 21. Looking at that, we had already broken above the 200, rejected off of that support zone, but once we hit the 200 is when we got our big ass candle. We started going up above that support and resistance zone, came down to retest, went up with the big ass candles, rejecting off of the 200. All 3 moving averages are lined up. We rejected off of this trend line. We had our hidden bullish divergence. We already broke that point. We can easily target the previous swing high right here. That's divergence, support and resistance, trend lines, moving averages, and a break and a retest. 5 confluences in one trade. Having all 5 confluences for one trade is going to give you so much confidence in your trade that you will be able to set this trade, enter with your stop loss and your take profit, and literally go like have pizza with your family. Because you did your analysis, because you waited for a break and a retest, because it rejected off of certain zones, because you had your trend line, because you had your divergences, all of those things, you're going to be so confident in it, and that's what's going to change your day trading. Waiting until you have all of those confluences is going to give you the confidence, and with more confidence comes a higher win rate. Instead of losing 50% of your trades while still being in profit, with these confluences, following this rule of having at least 3 of these 5 is going to increase your win percentage from 50 to 70 and even 80. I'm not promising 100% win rate because I literally think that's impossible, but this is going to change the game for you. So if you guys want more information on every single one of these confluences, on this channel are specific videos dedicated to these specific topics, and to make it easy for you, I put all 5 in one playlist right here. And if you guys enjoyed this video and you like the way that I teach, make sure you're dropping a like and subscribing to the channel for more videos like this. Thanks so much for watching, and we'll see you in the next one.